Well, hello everyone, and welcome to another edition of Your Daily 5 presented by StockCharts TV. I am your host for today's show. My name is Grayson Roze. I'm the Vice President of Operations here at StockCharts.com, as well as the author of Trading for Dummies and Tensile Trading, the 10 Essential Stages of Stock Market Mastery. It's been a little while since I've been on the show. It feels so good to be back. One of my favorite shows that we do here on StockCharts TV with a different perspective every day from a different analyst, charts they're watching, all of that good stuff. And I mean, what a time in the market, so much happening, so much craziness in the last year and specifically in the last couple of weeks. What a way to kick off 2021. So much happening in the market, so much happening on the charts. Really is the best time to be a technician. Of course, it's always great to be a technician, but right now especially, there's so much to watch on the charts. So we're going to get right into it here today with a couple of the charts that I am watching. Now, I got to admit before we get going, I cheated a little bit here today. I know the team says 5 charts that you're watching. I've probably got 20 charts that I'm watching here, but I've cheated a little bit and I haven't at the same time because I'm using our new multi-chart layouts feature in StockChartsACP. Of course, our new advanced charting platform, interactive full screen, we now have the ability to create multi-chart layouts in ACP and actually save those for future use. So makes it really easy to put multiple charts up on your screen at one time, which is what I'm going to show you here today. I've done that with a whole bunch of the charts that I'm watching sort of pre-formatted into these different multi-chart layouts. And the interesting thing is a lot of these are actually sample layouts that you can go to ACP and use really, really easily. So I'll show you how that works, but lots to cover here today on the show with tons of charts packed into those multi-chart layouts. So let's get right into it. What I wanted to talk about today, specifically to kick it off, is the big base breakouts that we are seeing all across the market, and really not just in the US, but also if we went international, if we went global, I could really add another 12 or more charts to this screen. So many big base breakouts all around the world, here in the US and around the rest of the world as well. When I think about the importance of that, when I see markets and sectors of the market, sort of subsets of the markets like small caps and mid caps, breaking out of these long bases, these big bases, groups that have been going really nowhere for the last couple of years, or in some of these cases, even the last couple of, almost 2 decades. Those big base breakouts are incredible drivers that are really going to push this market higher. I do think that we are a little bit stretched on some of these, but as I think about kind of the future of this market, this really, in a lot of different ways across a lot of different markets, feels like the start of something and not the end of something. So specifically 4 of the big base breakouts that I wanted to highlight today, we're going to start with the US on the left side of this multi-chart layout. We've got small caps and mid caps there, SLY, the S&P 600, and MDY, the S&P 400 on the left side of the screen, breaking out from sort of a multi-year consolidation in both of those, especially small caps. We've seen a ton of strength out of small caps and mid caps as well. You can see that in sort of the top panel of both of those charts, outperforming the total market. Just incredible to see these big base breakouts in those groups and the leadership among them too. To see small caps and mid caps really leading the market, that's something that we haven't seen for quite a few years. The story has been large cap, specifically large cap tech, but the story has really been large cap stocks leading the market. And now we're really seeing participation all the way down the chain with small and mid caps leading. So when I see that leadership plus these breakouts from multi-year consolidation ranges in small and mid caps, that's an incredible sign of strength that I think is really going to continue to push us higher in 2021. Now, 2 other indexes, though, that I'm watching carefully, again, one from the US and then one from outside. On the right side of the screen here, we actually have what's called the Value Line Arithmetic Index. It represents basically the average stock. What is the average stock doing? And again, it's a huge multi-year big base breakout in the average stock, pushing to new highs, driving higher, outperforming the market. When I see that, that's again another sign of strength, sort of down the food chain. The average stock, obviously, smaller than that large cap group that we've seen so much leadership out of the last couple of years. So again, when I'm seeing the average stock pushing out to new highs, breaking out specifically from such a long range like this. That is an incredible sign of strength. And we're seeing that reflected across the rest of the world as well, specifically in emerging markets, making a very, very strong breakout, a big run up here, sort of a gap and go move here in the Vanguard Emerging Markets ETF, VWO. But again, to see a nice big breakout from emerging markets, we're also seeing this out of Europe. We're seeing this just all over the board, all over the globe, but really these big base breakouts. So that is definitely a theme that is clear in my mind. Some of these long-term ranges that we're starting to actually move up and out of, and when it's also going sort of down the food chain, like I mentioned, into small and mid caps in the U.S., into groups like emerging markets. I mean, that is just a great sign of strength. So something that I am really optimistic about, seeing those big base breakouts all over the place. Now, a couple of the other key internal metrics that I'm watching in this market, though, I'm seeing a ton of outperformance of offense. This is actually a theme that I talked about at our year-end wrap-up that we did for 2020. The leadership of growth, the resilience of offense last year, and we're seeing that really continue into this year. So this is one of those sample layouts that we have available to you in ACP. You can actually just go there and access this as a StockCharts member. It's over on the left side of the screen under the sample layouts menu of the layout sidebar in ACP. But this is 4 different ratios that I personally watch to give me a sense of offense versus defense. Is the market favoring offense or is it favoring defense? So in the top left corner, we have consumer discretionary versus consumer staples, XLY versus XLP. Again, clearly favoring offense, discretionary, a more offensive sector, staples, a more defensive sector. So when this ratio is pushing higher, it means that the market is really favoring discretionary, the offensive group, over staples, the defensive group. So that ratio moving higher is a key sign of strength for me, and it says something really about kind of what our investors are favoring in this market, offense versus defense. We can look at that in sort of an equal weight flavor, because a lot of people criticize the XLY versus XLP being a cap-weighted ratio. It is subject to a lot of sort of not manipulation, but bias from the large cap names like Amazon, for instance. But if we equal weight that, we can see that this ratio is still moving higher, has come back off the highs a little bit, but is still pushing up with discretionary there, continuing to lead staples from an equal weight perspective as well. We can look at tech versus utilities. That's the green line down here. I like to watch that, again, sort of as a broader measure of offense versus defense. If we're favoring tech, that is very offensive for the market. If we're favoring utilities, very defensive for the market. This ratio continuing to move higher as well. And then another one that I watch is biotech versus healthcare. So healthcare is kind of an interesting sector because it does have defensive corners, but it also has offensive corners like biotech. So when we see biotech really firmly leading healthcare, it is another sign of sort of offensive favoring in the market. So another set of ratios that I'm watching that are telling me this market is really favoring offense as it moves higher. Now, we're also looking at breadth here. Again, another sample layout that you can view in ACP. When we look at breadth across the different sort of major indexes, we have the NYSE, the S&P 500, and the NASDAQ. We're looking here in the top panel at the percentage of stocks in those different indexes above their 200-day moving average. And then in the lower panel, we're looking at the percentage of stocks in those indexes above their 50-day moving average. So what we can see here, a key sign is that breadth at when we're considering the 200, positioning relative to the 200, really strong across the board. We're staying at very high levels, a lot of stocks in those groups above their 200-day moving averages, and really kind of holding that even as the market found a little bit of weakness in recent weeks. But when we look down at the 50, we can see that a lot of stocks have lost their 50. That's interesting to see. To me, it's actually a great sign of sort of a healthy market when we see a little bit of a pullback in some of these numbers. We had really stayed quite elevated for quite some time. So I actually am liking what I'm seeing on these breadth charts. But again, sort of seeing a bit of a departure here between some of the breadth measures above the 200 versus the breadth measures above the 50. So another key group of charts that I'm watching here, and again, one of those sample layouts that you can view in ACP. One of the things, though, that is concerning me about this market, we're looking at the Vanguard Total Index. This represents the total U.S. stock market. I am using on this part of one of our ACP plugins you can add to your account. You get this distance from moving average indicator. If you're watching this on YouTube, maybe we'll put a link down in the description to more information about that plugin. But specifically here for VTI, what we're looking at is how far away from the simple 200-day moving average we are and how far away from the exponential 200-day moving average we are. And when I look at this chart, we are stretched off the 200. This is a moving average ribbon. We can see that the ribbon is quite wide, something that we haven't seen in quite some time. Has been that way for a while. We saw a little bit of compression towards the end of last year, but we're back to a pretty wide ribbon here. And when we look at how far we are off the 200-day moving average, we are quite high above the 200s here, both the simple and the exponential on VTI. Now I put these orange lines here, just kind of key levels that indicate we're getting into thin air. What you can see is we've spent quite a lot of time above that orange level. This is around 10% on the exponential and around 12 on the simple 200. So this market does feel a little bit stretched to me. I think it would be very, very healthy for us to pull back a little bit, kind of reset. And I think that we will see that here in the spring. Typically, we tend to see that sometime in February and March. So I'm kind of looking for a nice healthy pullback. Remember, that is healthy as we think about uptrends. It's a healthy balance of rallies and reactions, higher highs and higher lows. So a pullback to me would actually be a healthy way to kind of reset this market a little bit. Now, one other thing that I wanted to share with you was one specific stock, something that I do every Sunday is I put out a list called 10 I'm Stalking on Twitter. If you follow me on Twitter, you've probably seen this. But this was this week's list, and one stock that I wanted to highlight from it that I'm keeping a close eye on is Electronic Arts. Just had a big announcement about a new game they're bringing out. Got a lot of excitement earlier this week. But specifically, when I think about EA, I think about another stock kind of making a nice base breakout. So what we're looking at here is the daily chart on the left. I like to see a little bit of outperforming the market. I love to see this accumulation on the daily chart, and again, kind of pushing up to new highs. A lot to love here. Rising 200, moving averages look great. A lot to love on the daily chart. But specifically on the 10-year weekly chart, which is what I have on the right, we can see that this has put in a big run up over the last couple of years and has actually been consolidating really since 2017, 2018. So starting to push up again. If this can break out again, sort of in concert with what we're seeing on the daily chart, I think this is a beautiful, nice base for Electronic Arts EA to be breaking up and out of. So I love what I'm seeing here on the combination of the daily and the weekly chart. And again, this is one of those multi-chart layouts that you can create in ACP, our new advanced charting platform. Tons that you can do with that platform. So I hope you've gotten something out of this. I hope you've had fun here looking at some of the charts over my shoulder that I am watching. If you're interested in following me, you can always follow my Twitter handle, pretty active on there, at Grayson Roze. Follow me on Twitter there. Check out either of my books, Tensile Trading, The 10 Essential Stages of Stock Market Mastery, or my Trading for Dummies book as well. And you can also visit my personal website, StockMarketMastery.com. You can follow me there for a couple other things. Always doing fun stuff with Stock Market Mastery, and you can actually follow that account on Twitter as well. But visit us at StockMarketMastery.com for more info there. Would love to keep in touch. Twitter's a great way to do it too. I'm doing more and more on there, having a lot of fun connecting with a lot of people on Twitter. So follow me at Grayson Roze there. The other thing, though, I wanted to highlight really quick before we wrap up is Stock Charts in Focus. This is a show that I'm hosting every Friday on StockCharts TV, 3:30 p.m. Eastern Time. New episodes coming out every Friday. We started this last year. It's our product-focused show. So every week we're really diving into the site, new features, new tools, what's happening on the channel, all that good stuff. Keeping you really informed about what is happening around Stock Charts, making sure that you're getting the most value out of the site that you possibly can. So Stock Charts in Focus has gotten just a great reception from our viewers. It's been so fun to hear the positive feedback. A lot of people are really happy with what we're doing there. So join us every Friday for Stock Charts in Focus. I think it'll really help you get more and more out of Stock Charts. Every week you'll see new things. And in the next 2 weeks, we got some really big stuff rolling out actually on ACP. So keep an eye on that show. We'll be telling you more on Stock Charts in Focus again every Friday on StockCharts TV and up on YouTube on the channel. So I want to thank you for joining me today. I will be back with you very soon for another one. And until then, chart on, my friends. Hey, Grayson Roze here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.